What is up, everyone? Welcome to Investing Club. In this video, we're going to talk about Hertz stock and why all of the Robinhood investors piling into Hertz are making a huge mistake. So Hertz is the rental car company and they are in a lot of trouble right now. They're running short on cash and they're going to file for Chapter 11. They're going to default on their loans. There's no doubt about it. It's just a matter of time when it's going to happen. And amazingly, despite this fact, Hertz skyrockets 825% since filing for this protection as Robinhood traders pile into the stock. And this is a chart I've pulled up before. It shows the price of Hertz stock compared to the number of Robinhood accounts that own Hertz. And you can see as Hertz is going down, the number of Robinhood accounts is going straight up. And this is what caused that huge surge in Hertz's stock price, is because Robinhood traders are just piling in, and these traders, investors obviously just don't know what they're doing and they don't really know what they're buying into. Now, what we're going to do is we're going to talk about why this happened, what hope there is for Hertz stock, and what's ultimately going to happen to the shareholders. Okay, so a couple of weeks ago, Hertz came up with a plan to attempt to save themselves from the impending Chapter 11 restructuring. And so they filed to sell up to 500 million of their common stock. And at the same time, they issued a warning saying they could be worthless. And despite this fact, that's what caused the huge surge in Hertz's stock price. All these Robinhood traders saw that Hertz is going to stay alive. And so because of that, the stock price is going to go up and we have to get in now, and FOMO. And so everyone's piling in and it drives up the stock 800%. And Hertz takes advantage of this, which was a smart move. They said they're going to issue stock while the stock's trading at up 800%, that's a pretty good move by Hertz. But all you have to do is take a quick look at what Hertz is saying about this stock offering. It's not going to help shareholders out at all. So whenever a company issues new shares, they have to come out with a prospectus. And so this is the prospectus that Hertz came out with when they were planning to issue $500 million of shares. And so they said right here, we are in the process of a reorganization under Chapter 11, which has caused and may continue to cause our common stock to decrease in value or may render our common stock worthless. So this is them coming right out and saying our stock is decreased and it's probably going to make our stock worthless. And then when you go down to the risks of the prospectus, this is what it says. Although we cannot predict how our common stock will be treated under a plan, we expect that common stockholders would not receive a recovery through any plan unless the holder of the more senior claims and interests, such as secured and unsecured debt, are paid in full, which would require a significant and rapid and currently unanticipated improvement in business conditions to pre-pandemic levels. We expect our stockholders' equity to decrease as we use cash on hand to support our operations. Consequently, there is a significant risk that the holders of our common stock, including purchasers of this offering, will receive no recovery under the Chapter 11 cases and that our common stock will be worthless. There's really not much else to say. This is as clear as it can be. Hertz is literally telling you our stock, and even the stock we're about to sell, is about to become worthless unless there is a miraculous recovery in business conditions, which is not going to happen. So there you go. That's pretty much all you need to know by reading the prospectus of these new shares that Hertz is offering. But do you think that those Robinhood traders and investors that are buying Hertz are reading this? No, they probably don't even know it exists. And so this is going to end badly for Hertz shareholders. And then just last week, we got even more news that Hertz pulls the share offering because the SEC says they were about to review it, and now Hertz isn't even doing it anymore, which was probably a smart move because it's sort of unclear if it's allowed to issue shares saying that they're about to become worthless. So now this isn't even happening anymore. And so of course, during Chapter 11, the shareholders are the last in line. First, it's the bondholders receive their claim, and then shareholders all the way at the end. Once everyone else in the company is paid off, that's when shareholders get their money. But even bondholders of Hertz are not very confident that they're going to be able to recover their investment. And we can see that by taking a look at Hertz bond prices. So we can take a look at some of their senior unsecured debt. And so these are bond prices, and the bond par price is $100. So keep that in mind. Right now, this was updated June 15th. For example, for the senior unsecured 5.5% note due in October 15th, 2024, right now of June 15th, they are trading at 43 cents on the dollar. So what does that mean? That means owners of these Hertz bonds are not expecting to get paid the full amount. They're only expecting to get back 43% of their investment. And you can see on May 14th, that was as low as 14 cents on the dollar. So even the bondholders, which usually have more security than the stockholders, they still aren't confident in getting their money back. We can even look at the secured notes. The senior second priority secured notes that are due in 2022. As of June 15th, they're trading at 74 cents on the dollar. And so the senior secured debt is the safest kind of debt you can have. When a company files for liquidation, the senior debt gets paid first. You are first in line to receive whatever money left that the company has is getting paid to you first. And even those on June 15th were trading at 74 cents on the dollar, which just shows that no investor in this company, no matter what they bought from them, is very confident that they're getting their money back. So if the secured debt holders aren't confident, then why should the shareholders be? It's very obvious that shareholders are going to be wiped out of Hertz stock. So in terms of an analysis on Hertz, there's really not much to be said. We can take a look at how much liquidity they have in the short term. As of the last quarter, cash and short-term investments, they have 1.41 billion. And then we take a look at their current liabilities, short-term debt and current portion of long-term debt, and they have 1.18 billion. So they hardly have more cash than they have liabilities becoming due. And that's only going to get worse and worse the longer that the economy stays shut down. Every day that Hertz can't rent out their cars, this is going to get worse. And right now, today, Hertz is up 55% after news that Jeffrey says that CarMax and AutoNation may swoop in to save Hertz. And that's just such great news, right? Everything's going to be okay. And we see stock price of Hertz up 50% again today. More people are piling in hopes that Hertz will be saved and the shareholders will recover. But the truth is, this means nothing for shareholders, because when you look at what CarMax and AutoNation are looking to do, the most obvious way that they can swoop in is to buy Hertz's rental cars. They're not buying out Hertz, they're just buying their fleet of used cars. And the money that Hertz is going to get from that is going to be used to pay off their lenders, which is their bondholders, the people that hold debt from Hertz, not the stockholders. So while this may be a good thing if you hold bonds from Hertz, for the stockholders, it probably means absolutely nothing, especially since these companies aren't hopeful in buying out shares as a company. They just are interested in the assets that Hertz has. And this is a normal thing that happens when a company files for Chapter 11. They have to liquidate and raise all the cash they can. So it makes no sense why today Hertz is up 55% when this news has absolutely no impact on the stockholders of Hertz. And so we take a look today, Hertz is up 55%. We saw the run up to over $5. Now we've come back down, but today we're up again. There's obviously a lot of people watching the stock, and at the first move of it going up, everyone starts to pile in. And it doesn't take a fortune teller to know that this is not going to end well. There's a lot of people getting in and out of the stock, but there's obviously some people holding Hertz right now. The stock is still at $1.93, so people are holding the stock. And one day, whoever is holding the stock is going to wake up and their shares are going to be worthless. That's usually how it works. And so whoever's left holding Hertz stocks on that day, whenever it comes, are going to lose a ton of money. And this hasn't only been happening with Hertz. We can look at companies like Chesapeake. We can take a look at companies like Chesapeake Energy, where we saw that one huge day where it jumped up like hundreds of percent. And since then, it's come back down. But there's still people holding the stock where it's pretty obvious that they're not going to recover from this. And those people are going to lose money. So this is just a sign of the speculation that's going on in the stock market right now. And whenever we see this sort of bubble activity happen, it almost never ends well. And so, I can't tell you what you should do. I'm not a financial advisor, and this isn't financial advice, but I can tell you what I'm doing. And what I'm doing is staying far away from these companies that are very clearly not going to make it out of this alive. There's no upside to investing in these companies. Yeah, if you want to call yourself a trader, you can get in and maybe get out at a higher price, but that's not the game I play. I'm a long-term investor. And so in the long term, there's no hope for these companies. Even if miraculously somehow they recover, their stock price is never going up to what it used to be. So that's it for this video. Just thought I had to get this out there. With so many people that probably don't know what they're doing buying into stocks like this, it's pretty important to understand what you're buying into. So if you learned something from this video, hit the like button, subscribe to the channel if you haven't already, and I'll see you on the next video.